Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Are you ready? Are you ready for the FOMC report? You're all about to make a lot of money or lose it. Depends on how you played it. The choice is yours. Are you sitting on the edge of your seat? You should be, because we're about to make a lot of money. Some people are about to go up in smoke. They're about to go through the air and explode a bit like this. In fact, we're going to send. In fact, we are going to prepare for doom and gloom. Oh yes, we're going to fire you off into space. But some of you, on the other hand, are going to do very, very nicely. You're going to set fire to the rocket and take off, and then you'll land on the moon, just like our little bloke here. You like this? But none of this, of course, none of it compares to the little fellas. The little fellas are ready with the little ladies. They are happy and willing and excited to join in because they want to be here when Jerome Powell speaks live from the New York Stock Exchange. Nah, not really. When he speaks live from Mars. No, not really. When he speaks live from Martyn Lucas's channel, that's more like it. That's more like it. Yes, indeed. As well as, CNBC and Bloomberg and the BBC and Sky News. Apart from that, though, he'll be here very, very shortly. And in fact, in just 24 minutes' time, we will get the rate decision. Will it be a 0.25? Will it be another increase? Will it be a pause? Will it be a hike? What do you think? Well, the only thing it should be is business as usual. We do not want surprises. We do not want a rate cut. We don't want a rate cut. Rate cut would show weakness and that we've completely departed from what we started. We do not want a rate cut. We also don't want a rate hike. Just checking my stream here a minute. What's going on here? Why aren't you playing? You're supposed to be playing there. What's going on? Let me come out of there. And come on, YouTube. What's going on? That's very slow. All right, I'll just do this then, shall I? I'll just play it from there. Does that work? There you go. That works. Yes, we don't want anything. We don't want any surprises. We want just everything to stay as it is. We want to just to hold rates as they are, carry on as intended. Good evening, Martyn Lucas Investor. Connor Keats, good afternoon to you. Good evening to you. Welcome from the face of Facebook. Lovely stuff. Anyone interested in buying Tilray or SNDL or green in general, I say it's a bargain right now, but the FOMC announcement could get you a better bargain. Absolutely right. He is dead right there. MSK, he's always right, isn't he? He's always right, but he's right today. He's absolutely right today. It went down. I said 220. Didn't see it going back down this low. Yes, it's undervalued now. This is primed takeoff point. Great opportunity. I absolutely agree. I am happy with my Tilray at 198. I think you're spot on there. Nothing wrong with that. Here we are, 198, 199. I agree with you, MSK. I think you're dead right to buy it, dead right to hold it. And if I was not being the way I am with being impartial, I'd buy it myself. Absolutely. Anyway, let's have a look. How we doing? Let me check my members over here. Any new members to invite in? Let's have a look. We've got 337 now on Discord. We had a lot more than that. And I kicked them out of the group. Now I do things slightly differently. But anyway, that's another story. You're not interested in that. Come back to there, members. Come back to there. Right, okay, that's good. Let me check the extra channel. I've got people in the extra channel at the same time as in here. That's the now I know. Now I know who the real Lucasades are. The people that are in both channels, that's the real Lucasades. That's double prizes, that is. because they have got me on one channel while opening a window on another. That's double prizes, that is, right there. See that, look? There's 14 of you. I know who that 14 is. I know. It says to Stephen Lewandowski says, I'm going to the main event. Don't go, Stephen. Stay where you are. Stay where you are, mate. Watching on Script News 2 only to have an antenna. No cable here. Only streaming TV. Going to the main event. Snicker. Chris Schultz. Hit the like on your way in. There you go. James 007. He'll tell you how it is. He ain't messing about. All right. Anyway. All right. Anyway. Good. Let's get ready to rock and roll, shall we? All right. Here we go. On my way. Mike's there as well. Mike, same thing for you. Stay where you are. Stay where you are. Have both channels. Have 2 windows open, Mike. Don't be lazy. Don't be lazy. On your computer, 2 windows. Watch 2 sets of ads at the same time. Do it. Congratulations on the mod. He's joined the elite now, hasn't he? He has. He's joined the elite. Who will be the first? Here's a question for you. Who will be the first to get a 1-month badge on the extra channel? Who will be first to get a 1-month badge on the extra channel? And the answer is everybody. No, everybody did it at the same time. So you all did it 1 month ago. Can you remember what date that was? Can anyone tell me what date it was when everyone did it? I can't remember what date it was. I don't remember what date it was. Anyway, I don't know. Anyway, let's read some comments. Pfizer is doing well. Pfizer is another great company. It's like J&J. Great buy, at least it was. Hit the thumbs up on the way in. There you go, James. Mike, hello everyone. Same here. I hit like. Great show as per usual. Mark R. How you doing, Mark R? You know, Mark, you should become part of the elite. You should become one of our members. 99 cents on the extra channel. Couple of bucks here. You do get a lot more perks and benefits though, just so you know. All right. They are completely separate channels. All right. Don't think, hang on a minute, I can become a member on the extra channel for 99 cents and get all the reviews. I get all the special parties. I get this. No, you don't. No, you don't. It's separate. Don't confuse it. Right. From Vietnam. Love you guys. Love Fur Pet. We do not have a member from Vietnam. Good morning, Vietnam. Yes, we don't have a member from Vietnam. Let me share with you the flags of the countries that we have. We have 59 countries. We do not have a member yet from Vietnam. We have 59 countries. I want to make it 60. We have. Here comes the list of countries. Here it comes. Hang on, I'm looking down. See all the flags? Vietnam's not there. We have 59 countries: Chile, USA, England, Australia, Turkey, Italy, Ireland, Portugal, Uruguay, Canada, Uganda, Lebanon, Norway, South Africa, Argentina, Germany, Dominican Republic, Mexico, Denmark, Mauritius, Czech Republic, Lithuania, Romania, Morocco, Costa Rica, Bosnia, Herzegovina, Croatia, Israel, Netherlands, Rwanda, Palestine, Iran, Jamaica, Taiwan, South Korea, Ecuador, France, Russia, New Zealand, Georgia, Iceland, Hungary, India, Switzerland, Poland, Belgium, United Arab Emirates, Oman, Singapore, Scotland, Wales, Cuba, Brazil, Afghanistan, Libya, Sweden, and Bulgaria. We have no Vietnam. And also, what is your language? What is your native language? I will speak to you in your language. Is it Vietnamese? Let me have a look. Is it Vietnamese? Yes, it will be. Can I say hello? Let's have a look. Hello.
Xin chào.
Yes, I can.
Xin chào.
Xin chào.
Xin chào.
Xin chào. Okay, you ready? Okay, here we go. Welcome our guest today, Welcome our guest today from Vietnam. Become the first member in the world to fly the flag for Vietnam. Then we would have 60 countries and 14 languages represented here on the show. We aim to be the most honest, real, live channel in the world. We are here 12 hours a day, 5 days a week, here to support, help people. Everyone has a voice. Everyone gets their question answered. Anyone can have a stock review. I'm here to help and support you. We also have music every Friday night live in my music channel. Become a member and fly the flag from Vietnam. The link is in the chat.
Vậy hôm nay khách mời từ Việt Nam trở thành thành viên đầu tiên trên thế giới treo cờ cho Việt Nam thì chúng ta sẽ có 60 quốc gia và 14 ngôn ngữ đại diện ở đây trong chương trình. Chúng tôi mong muốn trở thành kênh đời sống thực trung thực nhất trên thế giới. Chúng tôi đang ở đây 12 giờ mỗi ngày 5 ngày một tuần ở đây để hỗ trợ giúp đỡ mọi người đều có tiếng nói, mọi người đều nhận được câu trả lời cho câu hỏi của mình, bất kỳ ai cũng có thể đánh giá cổ phiếu. Tôi ở đây để giúp đỡ và hỗ trợ bạn. Chúng tôi cũng có âm nhạc vào mỗi đêm thứ 6 trực tiếp trong kênh âm nhạc của tôi. Trở thành một thành viên và treo cờ từ Việt Nam. Liên kết có trong phần trò chuyện.
There you go. I've put the membership link in the chat, and if you are on an iPhone, you just need to select a browser on your iPhone. It doesn't use the app, and select desktop version. If you're on an iPhone or an iPad, you need to use a browser on your device and select desktop version. It's because Apple try to get commission out of YouTube and they don't like it. So that's how you do it. Everything else works fine. That's how you do it. And we hope you become a member. Someone just said, here from Egypt. I've been to Egypt many times. I've toured all over Egypt on the local transportation, seen some amazing sights and some very sad sights as well. The news of the rate hike will be in 15 minutes. Okay, if you just tuned in. No, we don't have a member from Egypt either. We do not have a member from Egypt either. Let me just double check I've got that right. No, we do not have an Egyptian here on the show. No Egyptian flag flying on our show. There you go. King Mods. Sorry, the 10th of April was member day. James, look, he knows. He should know. He's a new moderator. He knows what's going on. Mike is the boss of the moderators. Yes, Mike is moderator boss. Jens, hey everyone. Portugal. Yes, we have a member from Portugal. We've got several members from Portugal. Here from Egypt. I don't have any members from Egypt. I guess I'm also the oldest member as well. Now that Bill has left, yes, you are. Definitely. No Northern Ireland. We have Ireland. We have Ireland. Do we have Ireland? Do we have Ireland? Do we have Ireland? Yeah, I'm sure we do. Hang on. Yes, we do. We do. I was thinking, flipping out, we don't have Ireland. Yeah, we do. We don't have Northern Ireland because it's not a country. Welcome, Love Fur Pet. Rate hike, is that confirmed? No, it's not confirmed. Absolutely not. Who the hell said that? Nobody knows. Absolutely. All those cannabis stocks behave as they did during the COVID period. Hard up and much harder down, in my opinion. I don't think it's reliable to keep such stocks, but good luck anyway. Where has Bill gone? Bill has quit. Bill decided to be negative every day and moan and doom and gloom. So he's not here anymore. I don't pay any attention to that anymore. We don't surround ourselves by negativity, and that's what Bill did. So no, Bill doesn't watch anymore. In fact, he does watch, but he doesn't want you to know he's watching. Anyway, let's not talk about that. Market's moving up a bit now, up 0.37%. Yep. Let's change the flags just a moment. We need to bring back in the main ticker, the prices. Here we go. Right, 10 minutes to go. Are you excited? You should be excited. It's a big, big day. I've got 100 grand. Now I'm the oldest. Yes, you are, Mike. You know what that means? Statistically, you're the first person to probably die. Yeah, probably. So statistically, you're more likely to die than everybody else. I love this show. Oh, dear. Mike's going, well, thanks for that. That's absolutely brilliant. Yeah, Stephen Lewandowski, he's number 2. He'll be right behind you. Yeah, that's right. Hey, Mike, think of it this way. Every cloud has a silver lining. Everybody is coming to your funeral, right? Everybody's coming to your funeral. Oh, God. Bloody hell, that's horrible. Yeah, of course it is. Of course it is. That's what happens, mate. If you're the oldest person on the show, you know. This is the sort of stuff you've got to get used to. It's only been nearly 3 years, Mike. Nearly 3 years. You must have it by now, right? Good God. Yeah, good God's right. You could say good God. It's Mike's birthday Friday. Yes, it is. Alongside Sensei. So we've got from one extreme to the other. We've got the old to the young on Friday. Forever young on Friday. Mike, I'll be playing for you on Friday. It's Saturday. May the 4th be with us. I know, but we're doing it on Saturday, all right? We're doing it on Friday. Stop moaning, all right? We're doing it on Friday. Okay, Fed report. Is everybody buckled up? Are you all ready? Is everybody ready? I'm going to have a latte. Look, can you see? Can you see? Can you just about see the creaminess? This is my special Fed drink. I'm drinking the Fed. Yeah, right. That's funny. But don't worry, if everyone's a little bit put out, that Mike is the star of the show, that statistically, you know, he's the first one to die. Don't worry. Stephen's next. Who's after that? Who comes after that? Me, probably. Me. I don't know why I'm getting too excited. So the rest of you, it's going to be rubbish, all right? I mean, you know, things are going to change when Mike's not here. Things are going to change. They're going to change when Stephen's not here. But they're going to change a hell of a lot more when I'm not here. Yeah, when I'm not here, right, that's going to pose a real issue. So for those of you that are in your 40s, 30s, 20s, it's not looking good for you. There's not much of a future for you. You know, you thought like, I'm gonna, it's like watching Coronation Street in England. You watch it for the whole of your life. No. Those of you that are under 40, sorry to let you down. This isn't going to be a lifetime experience for you. Just as you get to the senior part of your life thinking, I'd love to settle down with a cup of tea and watch Martyn Lucas's show on the telly tonight. You won't be able to because I won't be here anymore. So think on, make the most of it now. Make the most of it now because when the time comes, there'll be no more and you'll go, I wish I watched it more. I wish I watched it more. So do it. Do it now. Don't wait. I don't want to be like Leonardo da Vinci. I don't want to be famous after I'm dead. I want to be famous now. I want to cash in on it now. Not when I'm dead. Don't start watching my videos when I'm not here anymore going, I tell you what, I should have watched this when he was alive. This was brilliant. His music, I can't believe his music channel. I never watched the music channel. Can't believe it. Don't do that after I'm not here. Do it now. Because now I can cash in on it. You do it after. Where's that money going to, where's the YouTube ad money going to go? Where's it going to go then? Back to YouTube? I don't bloody think so. No. I'll make sure when I die, my channel gets taken down. No one's getting money out of my music when I'm not here. I'm not going to be like Elvis Presley, earning money for somebody else, because I'm just like Elvis. Just as many people watch me like Elvis, right? So I've got to think about these things, all right? I don't want Mike playing my Christmas playlist over and over again, making money for somebody else. When Mike watches my Christmas playlist, I earn the money. I get paid, right? When I'm not here, who's going to earn the money? All right? We're not having any of that. People taking advantage of my YouTube channel. I love it. 8 minutes to go. 7 minutes to go. Are you excited? You should be excited. Right. I'm going to show you in 2 ways. I'm going to show you in 2 ways. I'm going to show you in 2 ways. Just because, see, if you're watching on Bloomberg or CNBC, you get it one way, their way. With me, this is why my show's better, because you're going to get Bloomberg, what they say, and we're going to get Jerome Powell on the stage. But on top of all that, you're going to get the economic data from here.
Jose Quintana donated $5 through a super chat. Thanks for always keeping us together and informed with the FOMC report.
Absolutely. That's my job. That's my job. Thank you very much for the $5 super chat. I appreciate it. Right? So you're going to get the data. Thank you ever so much for that, mate. I appreciate that a lot. Yeah, love that. And not only that, you're going to get my entertainment. See? Nowhere else you're going to get that. See? Anyway, 5 minutes to go. I'm ready to buy some more. Are you all excited? Buy. Sell. Sensei birthday on Friday. Yeah, when I'm not here, this show turns to, yeah. That's right, Mike. If you're not here, who's going to do Mike? Who's going to be Mike? Only Mike can do Mike. Through Mike, we get to see your lovely mother on her 90th birthday. Now, we get all those things. We get you phoning in on a Friday. We get all the lovely moderation, even though sometimes you mess it up. It doesn't matter. Most of the time, it's a good job. Yeah. Most of the time, it's a good job. We get to miss all that. Stephen Lewandowski, we get to miss all about oil and all the information. All right? People here will be missed. People will be sadly missed. DXYZ at 14. Wait for lower. You are the best, Martyn Lucas. Yeah. Oh, I'm the best Martyn Lucas, or I'm the best. Yeah. I'm the best Martyn Lucas because there's no other Martyn. There's no other Martyn Lucas. I am it. If you Google YouTube and you look for Martyn Lucas, this is it. You know. So if you're looking today for a show full of excitement and happiness called Martyn Lucas, and you Google it, I want to see Martyn Lucas. It's always going to come to me. There's nobody else. So I am the best at being me. Definitely the best version of me. Yeah. Any other version I wouldn't even bother with. I am the best version of me. Definitely. Raymond Blitz. Go on, Raymond. Become a member of our family. It's about to get really good. I don't know why. It probably is. If you become a member, things will probably happen. All right. It's a bit slow at the moment. 20 months. Wow. Can you believe it? Yes, Stephen. In 4 months, you will have the VIP badge. You can join the 2-year VIP membership. You can be part of that for the one-on-one meetups. You are the best. Thank you, mate. Congratulations, Stephen Lewandowski, member for 20 months. Thanks, Bond. Thank James Bond. Right. 3 minutes to go. Are you ready? Go on, then. Go on. How often do I get a chance to do this? You ready? You ready? You want to hear it? You do, don't you? The FOMC report is coming up in 3 minutes. You ready? Let's get ready to rumble! Do you want to hear it again? You do, don't you? You want to hear it again? Jerome Powell. Let's get ready to rumble! You like that? You don't get that on Bloomberg. Right now, you don't get that on Bloomberg. If you go and watch Bloomberg, no one's doing that, right? No one's doing that. Mine is the most famous. I am. There's no doubt about it. I am the most famous Martyn Lucas in the world. Yeah, no question about it. I'm gonna come right out and say it. I am the most famous Martyn Lucas in the universe. Yeah. There's no question about it. I'm proud of it. Right, here we go. The rates are coming up. Stand by. It is what it is. When that number changes, 1.5 minutes. All hell's going to break loose.
The equity market. We'll go through the S&P 500, the Nasdaq, the Russell. Think about how we started last month. We came out of March and into April, and everyone started to say it's time to get into the rotation. Look outside of mega cap tech. Look at small caps, for instance. The Russell
Speeding
Lisa
it
in the
up.
month of April got absolutely hammered.
These are the companies more leveraged to rates staying higher for longer. They get more impacted from that. So it raises this question: can you get a rotation trade with rates staying where they are? Some people, like what we heard from Max Kenner today, was like, "Yeah, great, buy everything because you know what? They're high for the right reasons, and that seems to."
Where Bob is, and Ian Lincoln's talking about this at BMO Capital Markets as well. This idea of getting
45 seconds.
Buy, yield now, price up, yield down is the main issue. And the reason we're having this debate right now is we're begging for a Fed, John, to get out front and be ex ante. There's no evidence whatsoever that any major central bank can ex ante at their peril. They're going to be ex post. They're going to wait and wait and wait, and then
20 seconds.
Michael will have a payday
this afternoon, and we hope he gets that payday. We hope he shares it too. This afternoon,
get
it's
ready.
Price up, yield down, going into this decision. Let's bring up the bond move and look at the 2-year, the 10-year, the 30-year. The 10-year is down about 4 basis points on the session. These are the scores: 464.27 becomes 464.48. The 2-year 5.01%, down 2 basis points on the day.
5.5, 5.5. Where's it going next?
And finished on foreign exchange.
Are we going to go a rate cut or rate hike or rate pause?
This is not just about America, it's about the rest of the world as well. Dollar
What's that number there?
158, 157, 64 with your Fed decision. Here's Mike McKee.
Short and simple, a change in the statement, but no change in rates. The economic overview remains
no
the
change.
Same, word for word, with solid growth, strong job gains, and inflation that's eased over the past year, but remains elevated. And then a new line. In recent months, there has been a lack of further progress toward the committee's 2% inflation objective. Still, the statement says risks to achieving its employment and inflation goals have, quote, moved toward better balance over the past year, putting the assessment in the past tense and adding over the past year. The additions to the statement would seem to ratify the market's view
change.
that there will not
exactly.
be 3 rate
Markets
cuts
are liking
year,
it,
if any at all. The statement's view that the committee
did you buy the dip today?
It would be appropriate to reduce rates until it's gained further confidence inflation is moving toward target is unchanged. Now, the long-awaited balance sheet taper is here. The Treasury roll-off cap will drop from
now, this is not the most important thing.
Starting on
if
June
you've watched
1st.
my show
Officials
before, you will know what's important. We got the pause. That's great. But it's what he says next. Is he going to cut rates next? I say in the summer, yes. Okay? I hope you bought the dip. This is great. Let's look at Tilray, how it's moved. It's not reacted yet. It's not reacted. It's all about what he says at the speech. That is in 29 minutes. So the main part of this hasn't yet started. The good news is the markets are reacting positively. Nothing too much at the moment. It's all about what he says at the meeting. No one was really expecting anything different. So far, we're okay.
And what's happening with dollar yen? Bit of yen strength off the back of this. Dollar yen back down to 157.54. It was always going to be difficult to out-hawk what was already very very hawkish pricing in this market. Bear
Good.
in mind, though,
No rate change. Exactly. That's exactly what we wanted. That's the responsible thing. Markets are liking it so far. Not reacted much yet, though.
I think we could do that, Bramo, briefly. I'll go through this. It might sound a little boring, but every word seems to matter. The last statement, the first paragraph, read as follows. Recent indicators suggest that economic activity has been expanding at a solid pace.
Good.
Job gains have remained strong and the unemployment rate has remained low. Inflation has eased over the past year, but remains elevated. That first paragraph has changed. This is how it reads now. Recent indicators suggest that economic activity has continued to expand at a solid pace. Job gains have remained strong and the unemployment rate has remained low. Inflation has eased over the past year but remains elevated. In recent months, there has been a lack of further progress towards the committee's 2% inflation objective. I just wonder how long
Look at J&J. I told you guys,
in the FOMC,
best stock on the market,
to agree to that last line of that first paragraph.
You know, I wonder, because the discussion among Fed officials who did speak in the week before the quiet period was more hawkish. People seemed genuinely concerned. I don't think that maybe there was disagreement with this. I just wonder how much conviction Fed Chair Powell will have in this news conference to really build on that and say just how much less conviction they have and just how much they're going to do to offset some of the lack of progress.
I think they've got to wait for more economic data. And the bottom line, John, you quoted off Jobs Day. Do we link right now to Friday's Jobs Day? I'm sorry, we do. There's no real indication here of the labor market cracking. Jolt survey today was a little weak. Bob Michael mentioned that, but I just think they have to wait. They're in massively exposed position.
Fantastic lineup going into the news conference. Bob Michael's still with us. Joining us now, pleased to say, good friend of this program, good friend of ours, Mohammed Al.
There we go. We're all good. This is exactly what I wanted, exactly why I bought the dip. Fan-flipping-tastic. I hope you all did the same thing. We should turn green shortly. The market is starting to react. It will be volatile throughout the meeting, though. The meeting is in 26 minutes. That's when the volatility really starts to kick in. If you've watched the show before, you will know that's what it's all about. So welcome, everybody, to the show. Now, what we want to do, this is great. This is exactly why I bought this morning. Let me share with you what I did here. If you're watching the show and you watch my social media, you will know I told you what I was going to do. I've been telling you what I've been doing now for 2 years. I've stuck to the plan. I keep doing the same thing. I told you I'd buy, and I did. There you go. I bought 10 shares at 458, another 5 shares at 459, and we are now at 461. Fantastic. I turned on the margin. I am using it. We will be turning green very, very shortly. In fact, we are green now. We are actually green. My chart is out of sync again. This is what happens with Robinhood sometimes. We are actually green. The S&P is actually green now, and I am in. So I should be exaggerating because I'm actually in margin. So I actually am green. So I'm going to turn the studio green because it actually is. Sometimes on Robinhood, their calibration is out slightly, but I am definitely green at this stage. In fact, now it's just dropping on the line again, but I'm going to leave it green because I can see it being green. Anyway, Jose, let's get ready to rumble. Added to your many catchphrases along with the rubbish. I wouldn't touch that with the barge pole. Good. No rate change. I bought the dip today. Congratulations to you. I please any comment on nickel reverse split. I've got nothing to say at the moment, I'm afraid. I will try and look at it throughout the afternoon for you, though. This is going to be an extended show. Gold and silver are going up. Yeah, we've just bought the gold mine before it goes public, of course, with Jefferson Boots. Cannabis reclassification postponed. Guilty gunner. There's no evidence of that. That's not true. Guilty gunner. Cannabis reclassification postponed. That is not the case. If anyone has, that's not a member of our channel. That's unverified news. That is not true at all. They would not put that out. They would not put that out saying we've postponed it. There's no such news would say that. I don't believe that at all. I think that's someone trying to drive the stock down for their own benefits. I'm sorry. I don't think that's true. They would not say we've postponed the reclassification. I don't see any evidence for that. If I'm wrong, I'll say I'm wrong and I'll apologize, but I don't see any evidence to suggest that at all. Right. Now, what we want to do is we want to get busy. We want to get busy right now. Are you ready? Let's get busy. We want this video to go out to the world because this is a great opportunity today. We are coming to the end of rate hikes. There's no more rate hikes now. There's going to be no more. What today signifies is there's going to be no more rate hikes. This is a pause. From here, we go down. This is the beginning of the recovery. This is good. This is why I'm all in, why I'm using margin. We want the news out. We want everyone to know. So, we've got 106 people watching. Unfortunately, a lot of our people are in India who never sign into Google for some reason. So we can't get 106. They're not signed into Google. But the majority are. Let's click the like button. Smash the like button. By tapping the like and clicking the share button, you share this out to the world. More people come in and learn about the reality of what's going on here. There's an opportunity here to buy and make money. I'm doing it. So here we go. We're at 5 likes. 5, 4, 3, 2, 1. We are now at 31 likes. Boom, that was quick. All right, let's do it again. Are you ready? Okay, we've got 106 watching. The most we can get to is about 60 or 70 because a lot of people aren't signed into Google. Are you ready? 5, 4, 3, 2, 1. Tap the like button. Here we go. We want to get this out. We are now at 38. Okay, we'll go one more time and we want to see it to 40. Let me drink my Coke, refresh the screen, let's get to 40. We have got 20 minutes to go before Jerome Powell takes the stage and we learn all about where we go next. I am looking for a nice dovish response and talking about rate cuts in the summer. That's what I banked on. Okay, 38 in 5, 4, 3, 2, 1. I just want 40. 47! Yay! 47. Fantastic. Thank you very much indeed. Thanks ever so much indeed, everyone that tapped the like button. All right. Good stuff. Thank you very much indeed. All right, let's bring it back to here. Let's get more reaction. This is not the major thing yet. We need the
pandemic savings are run down. The credit card balances are high.
The meeting.
They rely entirely on the labor market, entirely on wage income. And if something goes wrong in that labor market, we are going to see this economy slow much faster than anybody would like it to slow.
Walmart as well, talking about a loss of pricing power. We've been talking about that over the last few months or so. Bob, Michael, I'm pleased that Tom brought up the mid-90s. You've talked about the mid-2000s. You share those concerns about economic weakness, cracks starting to build, yet you are still bullish as you have been since the mid-2000s. Could you explain why?
Well, I think Mohammed's right.
Dylan, you're asking S&P index fund or ETF, Martyn. That's the same thing. You can't buy the S&P by itself. You buy the S&P as an index. You buy the S&P through about 5 different ways. There's a few more, but the main ones are VOO or SPY. As a retail investor, the best option is the S&P through VOO. SPY is used primarily through massive billion-dollar traders on Wall Street, is the industry standard. And you might say, well, it's cheaper or more expensive or whatever. It's exactly the same. It's all to do with the inception date when they were set up, but they're exactly the same. They move exactly the same. And I've shown you over 1 million times that the S&P 500, the best way to buy it is through VOO. That is the most cost-effective way. The expense ratio is slightly lower, and I've explained why on many videos. VOO, VOO, Vanguard. There is the one that I own. That's my top and only stock. That's what I own. So there you go. You can buy it through SPY or VOO, but VOO is built, designed for retail investors. But it doesn't really make a difference. If you'd rather own SPY, you can own SPY, but it really makes no difference unless you've got billions of dollars. You will never notice a difference. But the expense ratio of VOO is slightly cheaper. You can see the expense ratio if I zoom down here. It's 0.03. I think SPY is 0.04, I think. When I last looked, let me have a quick look. SPY. SPY is, I think it's 0.4, but it's exactly the same. It does exactly the same job. Let's have a little look. Expense ratio, 0.09. There you go. So it's much more expensive now, 0.09. So you are much, much better off now that having VU. It's always best to be VU if you are a regular retail investor. There's no doubt about it, no ifs, ands or buts. It comes out exactly the same thing, same stocks, same allocations. It's so microscopic difference, you wouldn't even tell the difference. So there you go. There's the answer to your question. I like it. Yeah. Guilty Gunner is ridiculous. Straight away, I can always tell when nonsense comes in. I mean, these people think I'm daft, right? The government don't come on and say we postponed the classification. We're not postponed it. That's not even the language they would use. So it's absolute rubbish. I'm not going to read out what MSK said, but there it is. That is exactly right. Exactly right. There's absolutely no evidence, no facts. It's not a member spreading nonsense, trying to drive the stock price down. And there's no way the government would say, we postponed reclassification. You can't even postpone it. It hasn't even happened. It's not even scheduled. It's an intent. It's an intent to do something. You can't postpone an intent. I intend on doing something and I postponed it. How can you postpone something unless it's actually an event that's confirmed to happen? Anyway, good afternoon. Can you please look into UEC, uranium mining? I can, but right now we are focusing on Jerome Powell and Mustafa Abdin. And if you're become a member of the channel, I will obviously make a priority to do that. I was already green before the news, but even greener now. Time for some belly dancing. Hey, why did the MJ stocks crash today? Like I explained in the video, it was perfectly expected. I predicted it. I said it would happen. It did exactly what I said. Essentially, in a one sentence, people have bought this stock. They've been down for a long time. They got some news. They took their profits, knowing it would go down on FOMC report day because of volatility in the markets, uncertainty. With the market uncertainty, what was going to happen with rate cuts and all the rest of it. So when you get a massive 50% profit, people dump it. And I told everyone, do it, sell it, take some profit. Everybody did.
Shin has become a member on Extra.
Shin has become a member on the Extra channel, the exclusive VIP club. What membership did you come? You're special guest, Shin. There you go. Special guest, Shin. James is bound to welcome you in. There is the Extra channel. It's members only. It's only 99 cents. It's the best, most honest live channel in the world. 12 hours a day it's live. Only members can talk. It's there to help and support people. Like the guy who just came in a minute ago, spreading false information. You will never, ever see that on our Extra channel. We are all members, verified, useful, decent investors. Okay. Welcome, Shin. I just want to say hi, Shin. Welcome to the family. You are in the Extra channel. We're live 12 hours a day on the Extra channel, and welcome to you. You see behind the scenes, you see me on the phone. Oh, have we got any ASTI investors in the chat? Any ASTI investors, Ascent Solar Technologies? Do we have any ASTI investors in the chat? I have got some amazing news for you. You are going to love it. If you are ASTI or you're interested in Ascent Solar panels and all the rest of it with Ascent Solar, you are going to love what I'm about to tell you. You are absolutely going to love it. We got 14 minutes to go. Now Tilray's going up. It's undervalued now. It's a good time to buy it. People took profits. Whoever it was coming in early was trying to spread false information and all the rest of it. Mutual fund or ETF. Just get the ETF. Absolutely. The ETF is the way to go. ETF VU, that's the best thing. That's what I buy. That's the industry standard. You cannot beat that. Tell me how old you are, and if you are quite young, it's the only thing you ever need. To be quite honest, what do you think about Fidelity's mutual funds for S&P? I've never looked into that. To be honest, Maybe on Discord, someone could give you a better answer. But for me, the S&P, VOO or SPY is your best bet. Biggest difference is you can get in and out of the market with ETF during trading hours. The biggest difference is you can get in and out of the market, but you don't buy the S&P to get in and out. Why would you want to do that? You can only get in and out at the end of the trading day. Well, I wouldn't be interested in a stock like that. I wouldn't be interested in a stock that I can only get in and out on certain times. Not that I want to get out of the S&P, but I don't want any restrictions. That wouldn't suit me at all. Radiant Smile, Politics Watch, Live, Schumer and other Democratic senators bill for federally legalized marijuana. Yeah, of course it's happening. That person earlier was just, shall we just say is it what it is? He's an idiot. I bought S&P via Vanguard, ticker VTSAX. Is $120. Don't be put off by the price. That is irrelevant. That is completely irrelevant. Now, I understand some of you go, well, hang on a minute, VOO's 400. I bought a share for 120. That is not relevant at all. It's the percentage. Whether you buy a share for $1 or a share for $1 million, if you're up 1%, 10%, it's the same. It doesn't matter. The only benefit, the only reason why you'd be interested in a stock which is less in price, it's not going to grow any faster. It's exactly the same index if it follows the S&P. It's exactly the same, is because you can't fractional share. Maybe you can't afford a whole share of the S&P. Fair enough. But with Robinhood and most brokerages, you can buy $10 of it, $20 of it, $100 of it, $1 of it. It's called fractional sharing. Now, if your brokerage doesn't allow fractional sharing, you need to switch brokerages. But if you prefer and stay where you are, you can. And that might be the reason why you prefer, say, VTSAX, because it's $120 and you can afford that. It makes no difference. Don't be put off. I've had people say that to me. They say, hey, I can buy this stock and it's cheaper. It's not about the price. It's about the percentage. Makes no difference whatsoever. Bought at $74. Again, that makes no difference. If it follows the S&P, it'll be exactly the same growth. You'll earn 10% when the S&P, VOO, SPY earn 10%. Exactly the same. I've explained the only reason why. Rubbish, said J Long. That's right. Bought the cannabis dips. Riding up now, not advice. Yes. If you bought Tilray today, you have bought a great value stock. No question about it. That's obvious. That's a no-brainer. No-brainer at all. We're waiting for Jerome Powell to speak. He'll be speaking in 9 minutes from now. That's when it all kicks off. That's what we're looking for. So stick with us. How do I become a member of the chat? I was about to donate through a super chat. How do you become a member? Here is how you become a member. Mustafa, let me know what country you're from. You've got lots of perks and benefits. There is the link. If you're on any device, it works. If you are on an iPad or an iPhone, you have to select a browser on that device, Safari, Google, Chrome, Mozilla, whatever, and click the three dots at the bottom and go desktop version. Request desktop version, and then go to the link. The reason for that is Apple tried to get commission out of YouTube, so the app doesn't work, okay? You need to use a browser and select desktop version. Syria. We do not have a member from Syria. We do not have a member from Syria. We would love you to be a member from Syria. We'd love that. We have members in 59 countries, and we do not have Syria represented yet. We have lots of other countries in that area, but we don't have Syria, no. That would be wonderful to have you as a member to our channel. Fantastic. Anyway, there's the link. Yep, Kevin B. And then you need to watch the video with all the perks and benefits you get. You get lots of things. All right. What was it? 7 minutes to go. 7 minutes to go, yeah. Asti Spumante, innit? Martini and Rossi. Martini Rossi. Do you remember that? William, you're showing your age now. You're showing your age. I love it. So, have we got anybody here who is an investor or interested in Asti? Ascent Solar Technologies. I've got some breaking news. You're going to love it. And it's not what you think either. Ascent Solar Technologies. Interested in it? Let me know. I'm in Asti. Mike Koza. He wants to know about it. I took profits on Tilray yesterday. Bought again today. Great. That's exactly what we said to do. Take the profits and buy it again. Fantastic. Matador, I'm down with all that penny stock junk. I currently only own Trio Petroleum from small junk. Otherwise, I sold everything from small penny stocks. RW, I wouldn't just have one stock, though. I wouldn't just own one asset. That's not the best thing either. Mobix is a penny stock, but okay. Navantis, also a penny stock. I've got news coming out about Navantis as well. If Netflix drops, it drops heavy. One day after the Department announcement that it is moved to schedule cannabis in a historic policy shift, the senators held a press conference on Wednesday to unveil. Strone Corbett, can you send... Are you a member of our channel? No, you're not. If you become a member, you get access to Discord. Send that link. I will make a video on that with that evidence and share that to the world. That video will do very, very well. And you really want to share that. William, yes, please. What is the Asti report? Okay. Syria, USA. You want to send that in, Strone? I could use that. Martin, IBRX making a big bank today. Yes, Chris Schultz, I've got the IBRX video coming out soon. Mustafa, I will. I just bought some more. Heard Chipotle doing a 50-for-1 split. Oops, that's not good. Welcome, Mustafa. Do you have any members from Iraq? Yes, I do. I have a member from Iraq. Yes, I do. Maybe. Yes, please. What is the Asti report? Okay. But it's just from apparently an idiot in his words. No hate. But this is just from apparently an idiot in his words. No hate, just giving the news update. Not the idiot that said the... Yeah. Strone, I love it. I'm just an idiot. I love it. No, the information you're giving makes perfect sense. You know, I read the news all day long, so when someone says something ridiculous, I can instinctively know it's rubbish. And if you noticed, since we called him out on it, he's disappeared. Of course he has. He knows that everyone knows he's talking nonsense. Anyway, hi Mark, I currently have 13 shares, but there is only 1 penny. Okay, nothing wrong with penny stocks, by the way. Made some money this week just off stocks that aren't penny stocks, and I've been losing money for years. You literally just called me an idiot. I would have just hated, but you just hated on me previously. Strone, have you changed accounts? I never called you an idiot at all. I called somebody who came in who wasn't called Strone, unless that was you, unless you have 2 accounts, who said the very opposite. I'm here. Strone, you've confused me. There was somebody else in here, not called Strone, who was trying to say that... anyway, I'm confused now. I don't know where we're going. Never called you an idiot, Strone. Never did that. What you were saying there sounded very good. Right, okay. Let me give you some information. Let me give you some information about ASTI. A-S-T-I. Ascent Solar Technologies. I have been speaking today to Ascent Solar Technologies. As you know, they booked a spot to be on my show. They want to be on my show. And you won't believe this. Not only have we got a date, but I'm not going to give you the date right now. All right? I'm not going to give you the date right now for a very special reason. Because on that date, here we go, 3 minutes ago before Jerome Powell speaks, on that date, Paul Worley, the CEO of ASTI, is going to be live, not in my show, but in the studio. He's going to be live with me here in the studio. Very exciting. Hopefully we'll have some solar products live on the show. It's going to be a world exclusive. Meet the CEO live from my studio here together. It's going to be absolutely fantastic. I'm very, very excited. Really, really great. Anyway, plug is moving now. Mustafa Abdin. We got 2 minutes to go before Jerome Powell takes the stage. I'm getting ready for it. Let me bring that up to date. Fed leads rate. We got 2 minutes. I'm going to Mustafa Abdin. What country are you from? Here is your video. Strone. I'm sorry, I can't rewind the video back and watch my content right now. I'm sorry if there's been some confusion, but we're about to start the main event. I haven't got time now, I'm afraid, to rewind the video back and see what I said or didn't say and what we said and all the rest of it. So I appreciate that, but I haven't got time now to rewind the video back. Why and how becoming... Yeah, so Mustafa, here is your special video. You want to make sure that you watch this. All right? That's all your perks and benefits. Hang on a minute. I'm in the wrong channel here. Hang on. Let me refresh that. Hang on. I've got 1 minute. 1 minute, 1 minute, 1 minute. 1 minute, 1 minute, 1 minute, 1 minute like that. Okay, let me refresh that, change that. Switch account, Martyn Lucas Investor. Bloody hell. Come on, come on. Come on. I've got 1 minute. Don't worry, I won't miss it. There you go. We bought the dip this morning and now we are absolutely cooking on gas. Here comes the volatility like I promised. Now you can start making money again. It's time to make some hay. Here is the how and why video. Jerome Powell is about to speak. Don't worry, I won't miss it. Never missed it yet. Not going to miss it today. Right.
Like this. Let's begin with the S&P 500. In the last couple of moments, turning positive. We're higher by 0.1 to 0.2%. The Nasdaq just
there is your video, Mustafa.
Just for a moment with you.
Let me know what country. I'll fly the flag for you.
The repricing here. First meeting of the year, what were we? Something like 420.
Yeah.
Next meeting, 460. This meeting, 5%. We've added 40 basis points in between meetings each and every time.
For good reason. And it's not
I'm not sure your question.
See
Sense on Sunday to ask that question.
Very much persistent under the hood, albeit perhaps some of the cracks.
Sorry, Strone. I'll try and
key question is: are they comfortable
get
with
to
this?
grips with what we said
Are they
later?
happy with this? What do they see over the longer term? How do they see the federal deficit sort of weighing in on all of this? Honestly, there are a lot of questions. Is he going to just try to be as boring as possible? Let's see.
What did Claudia Sam say? Don't speak.
Yeah, anytime he opens up his mouth.
It's all good.
Conference.
Yeah, it's going to be downside risk from
Got
here.
it.
Take a listen.
Syria.
Just a moment, Chairman Powell is going to walk
Mustafa,
through that door and
I'll fly your flag at the end of the show.
Actually say something.
Right, but right now, though, it's showtime.
There has been a lack of further progress towards the committee's 2% inflation objective. Mohammed said he needs to complete the sentence. What does that sound like?
Basically, at this point, how much is that a
There's my portfolio, $5,000 to 79, nearly $80,000.
It just is going to take
I bought the dip. Here we go, folks. Showtime.
A lot longer.
Here's the chairman of the Federal Reserve, the news conference with Chairman Powell.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially over the past year, while the labor market has remained strong. And that's very good news. But inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all.
Great.
Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Inflation has shown although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter. Private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year and the jobs-to-workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected. Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased, and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we're leaving the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities. With principal payments on agency securities currently running at about $15 billion per month, total portfolio runoff will amount to roughly $40 billion per month. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices.
That's why I bought the dip.
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Very short as well, much shorter than usual.
Howard Schneider with Reuters.
That's good.
A question to follow up, if I could. Do you consider the current policy rate still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. And there are a few places I would point to for that. You can start with the labor market. So demand is still strong.
That's the first time he's given the indication that there's going to be no more rate hikes.
It's cooled from its extremely high level of a couple of years ago.
It's doing the job.
It's great. In job openings, you saw more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also we look at surveys of workers and surveys of workers and businesses and ask workers, are jobs plentiful, and ask businesses, are workers plentiful? Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess.
So I would say that we believe it is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that the data will have to answer.
So as a follow-up, if inflation continues running roughly sideways as it has been, the job market stays reasonably strong, unemployment low, and expectations are anchored and maintained, would you disrupt that for...
Expectations are not anchored?
Or anchored. Or anchored. Stable, roughly. Would you disrupt that for the last half point on PCE?
I don't want to get into complicated hypotheticals, but I would say that, we're committed to retaining our current restrictive stance of policy for as long as is appropriate, and we'll do that.
Gina. Thanks for taking our questions, Chair Powell. I wonder, obviously Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her baseline outlook. I wonder if you see that as a risk as well, and if so, what change in conditions would merit considering raising rates at this point?
So I think it's unlikely that the next policy rate move will be a hike. I'd say it's unlikely. Our policy focus is really what I just mentioned, which is how long to keep policy restrictive. You ask what would it take? I think we'd need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we're seeing, as I mentioned. But that's something like that is what it would take. We'd look at the totality of the data.
There was the
answer
bullish
that question.
signal.
That would include inflation expectations, and all the other data too.
There it goes.
Would that be like a reacceleration in inflation?
Well, I think, again, the test, what I'm saying is if we were to come to that conclusion that policy weren't tight enough to achieve that, so it would be the totality of all the things we'd be looking at. It could be expectations. It could be a combination of things. But if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
Chris.
Thank you, Chris Rugaber at Associated Press. You didn't mention the idea that rates are at a peak for the cycle, and didn't mention the idea that it might be appropriate to cut rates later this year, as you have at previous press conferences. So has the Fed sort of dropped its easing bias? Where are you standing on that?
So let me address cuts. So obviously, our decisions that we make on our policy rate are going to depend on the incoming data, how the outlook is evolving, and the balance of risks, as always. And we'll look at the totality of the data. So I think, and we think, that policy is well positioned to address different paths that the economy might take. And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater confidence that inflation is moving down sustainably toward 2%. So, for example, let me take a path. If we did have a path where inflation proves more persistent than expected and where the labor market remains strong, but inflation is moving sideways and we're not gaining greater confidence, well, that would be a case in which it could be appropriate to hold off on rate cuts. I think there's also other paths that the economy could take which would cause us to want to consider rate cuts, and those would be, two of those paths would be that we do gain greater confidence, as we've said, that inflation is moving sustainably down to 2%, and another path could be, an unexpected weakening in the labor market, for example. So those are paths in which you could see us cutting rates. So I think it really will depend on the data. In terms of peak rate, I think really it's the same question. I think the data will have to answer that question for us.
Well, and could you just follow on the path where you might not cut? Is that, you mentioned that it would be inflation persistent. Is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, we've set ourselves a test that for us to begin to reduce policy restriction, we'd want to be confident that inflation is moving sustainably down to 2%. And for sure, one of the things we'd be looking at is the performance of inflation. We'd also be looking at inflation expectations. We'd be looking at the whole story, but clearly incoming inflation data would be at the very heart of that decision.
FOMO is kicking in now to the markets.
Nick Timros of the Wall Street Journal. Chair Powell, to what extent has the easing in financial conditions since November contributed to the reacceleration in growth? And do you now expect a period of sustained tighter financial conditions will be needed to resume the sort of disinflation the economy saw last year?
So I think it's hard to know that. I think we'll be able to look back, from down the road and look back and understand it better. If you look at, let's look at growth. Really, what we've seen so far this year in the first quarter is growth coming in about consistent with where it was last year. I know GDP came in lower, but you don't see an acceleration in growth. I mean, the thought would be that financial conditions loosened in December, and that caused an uptick in activity, and that caused inflation. Presumably that's or tightening in the labor market. You don't really see that happening. What you see is economic activity at a level that's roughly the same as last year. So, what's causing this inflation, we'll have a better sense of that over time. I don't know that there's an obvious connection there, though, with the easing of financial conditions. In terms of tightening, you're right. I mean, rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and that's appropriate given what inflation has done in the first quarter.
You've said in the past that stronger growth wouldn't necessarily preclude rate cuts. I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was reaccelerating?
So I just want to be careful that we don't target wage growth or the labor market. And remember what we saw last year: very strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related supply side distortions and demand side distortions, and there's also monetary policy, restrictive monetary policy. So
please tap the like button and share the video.
Can't continue. I wouldn't give up.
Not for my benefit,
on further
for the benefit of sharing this story out to everybody.
Because, we do see
please do. This is a great day.
Still report that there are supply side issues that they're facing, and also, even when the supply side issues are solved, it should take some time for that to affect economic activity and ultimately inflation. So there are still those things. So I don't like to say that either strong either growth or a strong labor market in and of itself would automatically create problems on inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else like to see high wages, but we also want to see them not eaten up by high inflation, and that's really what we're trying to do, is to cool the economy and work with what's happening on the supply side to bring
Virgin Galactic is exploding, up nearly 10%.
Part of that will probably be having wage increases move down incrementally toward levels that are more sustainable.
Rachel.
Wow.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You talked about needing time.
There goes J&J. $200
is sustainably moving back down to 2%.
100%.
It's May now. Do you have time this year to cut 3 times, just given the calendar?
Yeah, I'm not really thinking of it that way.
We are.
What we said is that we need to be more confident, and we've said, my colleagues and I today said, that we didn't see progress in the first quarter, and I've said that it appears then that it's going to take longer for us to reach that point of conference. So I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope, and I don't know exactly when that will be.
And with hindsight, are there any signs that you can look back on now, looking at the reports from January or February or March, that suggested something more worrying than just expected bumpiness?
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter? We see strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings. So I think you're at a point there where you should take some signal. We don't like to react to 1 or 2 months' data, but this is a full quarter, and I think it's appropriate to take signal now, and we are taking signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence that we are on a sustainable path down to 2% inflation. That's the signal that we're taking.
Steve.
Massive day today, folks.
Steve Leisman, CNBC. If I could follow up on that. What particular areas were sort of temporary or blips in the inflation data in the first quarter, and what's the dynamic by which you expect them to work out?
FOMO is kicking in officially. FOMO is kicking in.
Will,
that's my prediction.
We will put the thing. We have put the thing under a microscope. I will say, nothing is going to come out of that that's going to change the view. I think that, in fact, we didn't gain confidence, and that it's going to take longer to get that confidence. But confidence, I just think, you know the story. What's happened since December is you've seen higher goods inflation than expected.
All-time high.
Higher non-housing services inflation than expected, and those two are working together to sort of be higher than we had thought. And there are stories behind how that happened. And I think my expectation is that we will, over the course of this year, see inflation move back down. That's my forecast. I think my confidence in that is lower than it was because of the data that we've seen. So we're looking at those things. We also continue to expect, and I continue to expect, that housing services inflation, given where market rents are, those will show up in measured housing services inflation over time. We believe that it will. It looks like that there are substantial lags between when lower market rates turned up and for new tenants, and when it shows up for existing tenants or for in housing services. So,
if I could just follow up, is there a bit of a contradiction?
I'm not selling
in the idea
anything.
That you are reducing quantitative tightening, which is sort of an easing, while you're holding rates steady at a restrictive rate to try to slow and cool the economy and inflation? Thank you.
I wouldn't say that, no. I mean, the active tool of monetary policy is, of course, interest rates. And this is a plan we've long had in place to slow, really not in order to, to
correct, Radiant.
Provide
Radiant's
accommodation
learning.
to the economy, but to
Radiant spot on.
To be less restrictive to the economy. It really is to ensure that
Oh,
the process
Virgin
of
Galactic.
shrinking the balance sheet down to where we want to get it is a smooth one and doesn't wind up in
Virgin Galactic is about to go through
with
$1.
Financial market turmoil the way it did the last time we did this, and the only other time we've ever done this.
From Bloomberg. Two questions. First, simple one. Given the run of data since March, has the probability in your mind of no cuts this year increased or stayed the same? That's the first question. Second question. Chair Powell, you joined the board in 2012, and I'm sure you remember, as I do, what the jobless recovery was like. Lawyers, accountants, all kinds of highly qualified people who couldn't get jobs. And given your history there, I wonder if there's an argument for being more patient with inflation here. We have strong productivity growth. That's helping wages go up. We have good employment. And so it seems to me there's a lot of hysteria about inflation. I agree. It's, nobody likes it, but is there an argument for being patient and working with the economic cycle to get it down over time? Thank you.
So on your first question, I don't have a probability estimate for you, but all I can say is that, we've said that we didn't think it would be appropriate to cut until we were more confident that inflation was moving sustainably on 2%. We didn't get, our confidence in that didn't increase in the first quarter, and in fact, what really happened was we came to the view that it will take longer to get that confidence. And I think I think it's, the economy has been very hard for forecasters broadly to predict its path, but there are paths to not cutting and there are paths to cutting. It's really going to depend on the data. In terms of the employment mandate, to your point, if you go back a couple of years, our sort of framework document says that when you look at the two mandate goals, and if one of them is further away from goal than the other, then you focus on that one. It's the time to get back there times the times how far it is from the goal, and that was clearly inflation. So our focus was very much on inflation, and this is what we referred to in the statement. As inflation has come down now to below 3% on a 12-month basis, it's become we're now focusing the other goal, the employment goal, now comes back in to focus, and so we are focusing on it.